Households across China have been thrown into panic over the past week. The company building their flats, Country Garden, missed $22.5 million in interest payments last week. Now the company, one of the world's largest home builders, has until early September to make the payments or follow hundreds of other developers into default and restructuring. Local officials across China are watching the developments closely. Country Garden is renowned for building huge projects in China's second and third tier cities. Though its debts are smaller than those of Evergrande, a Chinese construction giant that defaulted in 2021, Country Garden was building 4 times more homes than Evergrande was before it defaulted. At the rate it was delivering them in the first half of 2022, at least 144,000 buyers will not receive keys to homes they were promised by the end of this year. Further troubles would leave even more families out in the cold. Ironically, Country Garden is one of the developers declared healthy late last year by Chinese authorities to make investors feel safe about the housing sector. And it is not debt which has brought the company down, but loss of confidence among buyers, a sign of deeper trouble in China's property market. Sales among the 100 biggest developers fell by 33% in July compared with a year earlier. The domino effect this created has hit material suppliers along with engineering and construction firms, bringing the housing sector, which contributes as much as 30% to China's economy, close to the precipice. Also online are Chinese banks, which have lent a whopping $5.6 trillion as housing loans. The other bad news is that housing prices are dropping. Chinese officials have kept this under tight wraps, stating that fall in property prices since COVID has been negligible. Market reports state otherwise. Existing home prices have fallen at least 15% in prime neighborhoods of major metropolitan areas like Shanghai and Shenzhen, as well as in more than half of China's Tier 2 and Tier 3 cities. In Lianyang, a downtown area popular with expats and financiers in Shanghai, residential prices have slid 15% to 20% from record highs in mid-2021. Homes near Alibaba Group Holdings headquarters in Hangzhou have dropped about 25% from the 2021 highs. Prices of existing homes in at least 5 popular districts of Shenzhen, China's least affordable housing market, have slumped 15% in the past 3 years. The Chinese House of Cards is also collapsing for another reason. The Chinese government intervenes on prices directly with local authorities, setting minimum rates for housing in cities. Only these rates are now much higher than market prices. This intervention has also ensured that buyers are staying away from the market. Bureau Report, Business Today Television. If you like the video, do like, comment, share and subscribe.